This is Mike Reed with CNelect, and this is this week's proprietary research and analysis on the crude market, specifically the crude forward curve. And what we're trying to forecast is when will the forward curve tilt from contango to backwardated and backwardated back to contango. The current crude curve is backwardated and has been since the fall of last year. When crude is oversupplied relative to demand, crude is cheap and the market has a contango forward curve as an incentive to store crude today and withdraw it tomorrow, and you have to cover your storage costs to do so. The inverse is true, is when demand exceeds supply, the curve goes backwardated because the market is incentivizing all the storage to be depleted. So as a storage operator, you're very interested as what is the tilt point between contango and backwardated to be able to forecast when crude is either injected or withdrawn. I'm going to look at this from two different dimensions. The first is WTI and Brent, so the crude dimension, and the second is on the tenor of storage. I'm going to look at it on the dimension of 2-month storage, prompt month versus second month out, covering the cost of storage, and also long tenor storage, 12-month prompt month versus 12-month out, covering the cost of storage. My storage assumptions for this exercise are 30 cents per barrel per month. Let's start with the short-dated 2-month storage market. The short-dated 2-month storage market on WTI, I see WTI tilting from backwardated to contango at $56.98 a barrel, but I don't see storage injection starting until $53 a barrel in order to cover the cost of storage against the slope of the line. If I shift to Brent, I don't see Brent tipping from backwardated to contango until $57.30 a barrel, and I don't see Brent commercially stored until $52.11 a barrel. Let's shift to long-dated storage, 12-month storage. I don't see WTI tilting, long-dated curve, until it falls to $52.25. I don't see storage injections starting until $42.95. Why the low price? Because we have to cover storage for a 12-month period. I don't see Brent tipping until $55.22 a barrel, and I don't see Brent commercially stored until it falls to $43.20. I want to close out by saying that today's WTI price is about $66 a barrel. Brent's about $70 a barrel, so you can see that they have to fall a substantial amount before storage becomes viable again on the injection side. Just a quick note about storage in the U.S. We can store a little over 600 million barrels of crude. Of that, about 300 million barrels is operational storage. That will be stored regardless of what the forward curve does. It's the balancing mechanism operationally for the refineries. I'm only talking about the other 300 million, which is commercial or merchant storage that is completely driven by the shape of the forward curve. For this and much more, please visit us at cnelect.com.